The Business Journal Roundtable Series is sponsored by iSynergy, creative digital advertising.
So let's get out our crystal balls. What's going to happen? What's going to happen in this marketplace, not only with home prices, but with mortgage rates? Where are we going?
Great question.
Yeah. Mortgage rates, they have stabled off. Okay. So, people were concerned, we're going to see fixed rates in the double digits. Well, they just never got anywhere near that.
No.
I think you've probably seen in the last couple months as well. I mean, you get a little fluctuation, 0.25% here or there, week to week.
It's about a 10-year treasury bond,
Yeah.
more so than anything, not the Fed funds rate. So when they raised last time, mortgage rates actually came down the same day. We're seeing some volatility, but nothing major. Yeah, they've really, they're settled in the sixes somewhere, depending on.
At NAR last year, I keep referencing back to Dr. Young. He's the economist for NAR, National Association of Realtors. I listened to him in Chicago early last year, and then I listened to him again in Orlando in November, and then earlier this year. So I've been trying to, and he'll show what's happened and it gets pretty involved. But he really, what he's predicted has kind of been happening. So I keep referencing back to that. And we saw the big, spike. He continues to think that it is stabilizing. He likes to call it a correction. What we're going right now, probably seeing as a correction. We had an entire generation that thought money was free. And we went from free to, very expensive. So it was a lot of, just shock. So, very quickly. So I think the phase right now, the Q4 last year, Q1 of this year, kind of going into Q2 is more of a correction. And, then more of a stabilizing. He even predicted that interest rates were going to go down. They should stabilize by the end of this year, going into next year, high fives. He said 5.7, 5.8. It's just coming from the national economist. And once that happens, 24 really, sets up for a good, strong year. It's really what I've heard over the last year and a half, and I've seen so far happening. Now, we'll know more come, second half of this year and going into the next year. But
I'm sure, and I'm sure Marlon remembers these days that, people would kill for 6%.
Exactly.
Interest rates.
I sold a house for 21% interest fixed rate. Yeah. So to me, what's 6%?
Yeah.
It's seriously, it's like.
Well, it's an entire generation think it was free. That's why.
That's what I'm saying. And when I bought my first house a long time ago, and I had to go adjustable. Because the fixed rate was 14%.
Exactly.
Yeah, so I went on an adjustable, and those adjustables were great. Yeah. I've never even had to refinance because as the rates came down, my adjustable worked. And I have to agree with Michael. I think it's a correction. I think everything goes in cycles, and so I think that it will correct, and I think it is correcting.
And the new norm is going to be okay.
Yeah, I think.
And once they realize that's the norm, and it's going to be fine.
Because people have to deal with that adjustment.
Yeah,
Samantha?
I think we're still going to have a shortage too.
Yeah.
Oh, yes.
Like the absorption rate right now in Mahoning County is just a little over a month of supply. So it's still definitely a seller's market across all price points. But it's still,
Supply and demand's not going to go away.
Yeah.
Even once the interest rates correct itself, and we get a little bit back of what we lost during this correction and people getting priced out of markets, supply and demand is not going to go away anytime soon.
Yeah.
So we still have that issue.
And I tell a lot of people, I'm like, okay, well, it's 6% now and you're going to wait for it to go down, but what if it goes up? Yeah. If it goes down, you can refinance in a year, in 2 years. So I just keep driving that home to just refinance.
Yeah. Yep. And there's a lot of financial institutions, us included, that are running programs now that, they're giving them 2 years and they can refinance down the road at very much limited closing costs as well. So
I think if we would have went back to 2019 and the pandemic didn't happen though, we probably would have been around this interest rate anyway. It's where we were heading. Right. So it went down.
Instead of 5 months.
Yeah, it just went down so far that it's a sticker shock, but this is probably where we would have been anyway, so.
So
It's been the perfect storm, I like to say. All the way
Yeah.
this goes all the way back to so many factors, back to the housing crisis and coming out of the housing crisis and into it's been the perfect storm. But not so perfect, I mean, but storm. Storm.
The Business Journal Roundtable Series is sponsored by iSynergy, creative digital advertising.